Finally, the South African rand held steady around 18 to the dollar, its strongest level in nearly 5 months, following President Ramaphosa's meeting with US President Trump. Now, while Trump made controversial remarks about the treatment of white South Africans, Ramaphosa said the two agreed to open talks on critical minerals, though no further details were shared. Meanwhile, the finance minister lowered the 2025 GDP growth forecast to 1.4%, down from 1.9%. Moreover, the Reserve Bank kept its inflation target at 3 to 6%, with speculation around a future change helping lift investor sentiment. On the markets, the JSE All Share Index and the top 40 indices closed lower, with broader-based declines. Market analyst Mabinini Piri offers a closer look at today's market movements.
So the South African rand is holding strong, trading between 17.91 to about 18.05 to the US dollar, even after a pretty heated meeting between President Ramaphosa and Donald Trump. But here's what matters for investors. The markets didn't flinch. Despite the political drama, the rand staying power shows that investors are focusing more on South Africa's solid economic story. Inflation is under control. Interest rates are still attractive, and the rand is pulling in global traders looking for yield. The noise from the meeting didn't shake that confidence. Investors trading the rand might want to keep an eye out for the 17.75 to the dollar level. That's probably the next resistance. If it breaks lower, we could see more gains, especially with the US dollar showing signs of weakness and a rate cut on the horizon. For stock market watchers, particularly those tracking South African mining stocks, there's a longer play here. If the US and South Africa manage to smooth things over, we could see stronger trade ties, and that's a plus for the local exporters and also for the JSE. All that to say, the rand brushing off political tension is a bullish sign. For now, South African markets are looking pretty attractive. But of course, we still have to keep an eye out for US data for the next big move.